100 odd is the levels that they are at this point. But let's now go across to Mrugank Paranjape, who's the MD and CEO at MCX SX, India's largest commodity bourse by turnover. Mr. Paranjape, happy Diwali first and foremost to you and everyone at MCX SX. Let me ask you about the trading of derivatives, which has been opened up this time. How and this has been significant for you and for your for the commodity exchange. Tell us how soon are you looking to introduce options trading? Will it be this year or now pushed to next year?
Hi, good evening and a very happy Diwali to all your viewers. Just a small correction, I'm from MCX, and just so that, just to get some history right, MCX SX is a completely different exchange,
right,
now renamed as MSCI, so let's get that clarity.
Sure.
Yeah, in terms of the launch of options, that's something which SEBI has already mentioned is part of the roadmap. There is some sort of an indication. We believe that it should be another 6 to 8 weeks when we will get full clarity on all the details of what sort of contracts can be launched. There are some parts of those details still awaited. And once that is done, I would expect both the exchanges and commodities to come back within the next 4 weeks or so. So we feel confident that fourth quarter this financial year, definitely trading in options will start on all the exchanges in options.
All right, that's quite encouraging, Mr. Paranjape. And if you can also shed some light as to what the kind of settlements for those contracts will be, whether will it be cash settled or will it be physical delivery, certain other modalities, as also if you can break it up into a commodity-wise complex. I understand there'll be heavy interest as far as the agri-commodities are concerned, especially in terms of hedging concerns as far as farmers go, overnight hedging risk, and in terms of the non-ferrous metals play as well, sir.
So first and foremost, I think the SEBI constituted a group which is called the CDAC, and that group has given very detailed recommendations in some parts. There are some parts of the work still pending. What type of contract finally will get introduced is entirely for SEBI now to take a call. SEBI is in discussions with us, with other exchanges, with market participants, and that's one part of the detailing, as I said, which will come in the next 6 to 8 weeks, which will be on whether it'll be a cash settled contract or not, etc. So that's one part. As regards the complexes, as you know, there is enormous interest from both the non-agri sector as well as some parts of the agri sector. Within the non-agri sector, we believe, looking at the criteria that have been set out by SEBI, there are at least 5 or 6 commodities where there could be a lot of opportunity for options trading. We believe this will be in the gold, in crude, in copper, and in silver. When it comes to agri-commodities, yes, there are a few agri-commodities which would as well qualify. We believe in terms of all the criteria that are being set up by SEBI. From our perspective and what we trade very heavily and have a very liquid contract on our exchange, we believe that either cotton or CPO have a very good potential in terms of options.
Right. Mr. Paranjape, how about the revised transaction fee structure that's been effective for trades executed from October 1st? Give us a sense of how that has panned out.
I mean, it's something which we did because it was part of, the investments that we need to make. We have been, over the last 2 years, investing very heavily into technology and people, and that necessitated for us to have, maintain the profitability of the exchange. In all, it's something where we will keep evaluating, and as newer opportunities are coming up, we will see what best suits the market and what best suits us in terms of trading fees going forward as well.
Right. Mr. Paranjape, we are sitting on Diwali right now. By how much do you see in terms of buoyancy for volumes pick up as far as till, say, ballpark till the time next Diwali is concerned? And also, sir, I'm assuming the demand will be a lot from tier 2, tier 3 cities where a lot of commodity action is focused from. So in terms of sensitizing them, in terms of teaching and making them, explaining to them what the kind of model is, how will it really work, and how to hedge risk overnight will be quite a task. So what's the plans and preparations on that end as well, sir?
So to your first point, I think from the exchange perspective, we really look at participation much more than just saying what the volume is going to be in the next 1 year. From our perspective, participation is something where we are looking to increasing participation in both the retail and the corporate sector. We believe that the revised, the newer SEBI listing guidelines as well as directives from RBI to all corporates, which encourages them to hedge, will go a long way in terms of increasing the overall participation. So from an exchange point of view, what is extremely important is to keep a very big focus on increasing the participation, whether it is whichever segment it is and whichever product it is. To get to that, in terms of education, well, as you might be aware, we have a very, very healthy track record in terms of the number of educational programs we do. Over the last 3 years, we have been averaging more than 1.2 program per day. We have done more than 1,080 plus programs in the last 3 years. In addition to, and within that, more than 400 programs are specifically targeted towards hedgers. So we will continue. In fact, you will see a lot more build out in terms of our collaborations with universities, with educational institutions, where we will roll out more programs to actually impart education in commodities and commodities trading. And at the same time, we will probably have a much bigger focus on how options and other such products can help people hedge better, and that will be the focus. So within the next 1 or 2 months, you will see a much bigger presence in terms of whatever we do on the education side as well.
All right, Mr. Paranjape, that's the MD and CEO MCX joining us. Thank you so much for your time. And once again, a very happy Diwali to you and your family.
Thank you.
We now have, I understand, Mr. Dipin Shah. He's the head PCG research.